Good morning and welcome to Almus Market Mornings. US inflation offered a mild surprise. Core prices eased, good prices were flat, and services cooled. They sent the treasury yields lower, gold higher, and pushing the dollar towards the year to date lows. Traders now see a better than 70% chance that the Fed cuts by September. Trade headlines are back in focus as well. President Trump says he will be sending letters within 2 weeks, setting fresh unilateral tariff rates, sort of like a take it or leave it deal ahead of the July 9th deadline to reimpose the higher duties. Morning, JK. Does the latest CPI print strengthen the case for a near term Fed cut? How are you reading that from the data? Also, there seems to be some geopolitical flare up in the Middle East. Could you elaborate on that?
Yeah, good morning, Swaraj. Yeah, CPI number was definitely softer than expected, coming at 0.1% rise only, eh, both the headline and the core, whereas expectation was 0.2% and 0.3% respectively. And even the year-on-year numbers were somewhat lower, although year-on-year number at 2.8% for core year-on-year is much higher than Fed's target of 2%. Therefore, there's no case for complacency. Fed will remain on guard. Yes, if the trend continues, and if there is no further reflection of, the tariff-related price rises in the inflation, then we may possibly expect Fed to take a slightly softer stance. However, most people expect the tariff-related price pressures to be felt in the numbers in July. So we'll wait and see. So I don't see any change in the Fed's language towards the dovish side in the upcoming meeting next week. Of course, more than the CPI focus for most of the day yesterday was on the reported trade deal between China and US. Although no much details were available in the Asian time, markets were steady to stronger, particularly on the stock market. However, as we got into the US time, we got those very much the details, and it looked like the agreement was more on some of the export controls that both the countries had imposed, like the rare earths and magnets which China had stopped exporting to US. They agreed to restart those exports, remove those barriers actually, and then the US side will also supply, it was more on the technology side, and so that they agreed to restart to China. White House official also said that the agreement with China allows US to charge 55% tariff on imported Chinese goods, while a 10% reciprocal tariff will also remain. China will charge 10% tariff on US imports. So while the export controls were addressed, paving way for supply chain bottlenecks to be removed. The tariff issue still remains. This is the reason why China remains very guarded. They are not upbeat about the agreement. In fact, China has come and said that even this, release of the export ban will apply only for 6 months. And as you mentioned, Trump again mentioning that within 2 weeks, he wants all the countries to come with their proposals, and otherwise he will decide the tariff to them, a reciprocal tariff to them. Now that even the appeals court has allowed him to continue to charge the tariff while the appeal will be finally heard on June 30th. So I think overall there's, I would say, no major breakthrough is seen. Some bottleneck has been removed. That's as far as the tariff issue, trade issue is concerned. Yes, the more concerning thing is the development in the Middle East, where it looks like the situation has gotten worse, and in fact there is a move by the US Embassy for evacuation from Iraq, and even escalations in the region has also prompted UK maritime trade operations to issue a rare alert warning rising military risks in the Gulf. Some people are rumoring that possible Israel attack on Iran's above ground nuclear assets. Now, all these things have suddenly arisen, and even as just a couple of days back, we were talking about US-Iran deal being, in progressed. So, this is a shocker to the market. So, I think the economic data and even the tariff took a backseat, and market is now reacting, buying the safe havens like gold, euro, and yen. And the stock markets are obviously not liking it. And of course, as I said, both the major indices in the US almost nearing their all-time highs. Market is not really interested in buying stocks anymore. So we are seeing some sell-off in the market, brief sell-off in the market. Also, it's not across the board sell-off, but definitely US markets are down, and some of the key markets in Asia are also down. As far as the bond yields are concerned, there was every reason for bond yields to come lower, or rather bonds to be bought. First of all, it was CPI number, which was better than expected, and then some sort of a relief in the trade negotiation, but not really what matters for the tariffs. And then, of course, the Gulf tensions, safe haven buying of treasuries. So we've seen a retreat in the yields once again from the key levels of 4.5% for 10-year and 5% for 30-year, which is still looks quite safe. And gold has rallied above 3365 once again, for trading as low as 3320 yesterday. So this, I think, the Gulf news will hog the headlines in the coming sessions, and with market will be very cautious on the same. Of course, there was also a headline which said that Trump is now asking Fed to cut rates by 1 full point, with CPI, he looks at as a great number. So he's saying that he would pay much less interest on debt coming due. So this is the kind of statement that we've seen from Trump yesterday. Market ignores these things, and they have been very cautious, both on the stocks and on the dollar. Of course, as I said, euro has made further progress towards its cycle high. Now it touched almost 1.1530, the cycle high being 1.1575. Quite a bit of a safe haven buying there. Yen is closer to 143. And see, the failure, or rather the very uninspiring trade deal is very much reflected in the Chinese yuan, which is now once again above 1.19, 7.1950. And if anything, if there was any good deal, it should have been reflected in the Chinese yuan rate. So that is not happening. So dollar is on a very cautious and mixed tone. Safe havens are rallying. Other currencies remain somewhat steady, and watching for further developments in the Gulf. Of course, for India, the Gulf developments are not in a good state, because the oil prices have risen by 5% in the last two sessions, and it's going to hurt us a bit. And also, the CPI number is expected today from India. Expectation is that number will fall once again towards closer to 3%. Now, some people are expecting even below 3% for the first time in 6 years. And this can be, seen positively by the markets. However, I think having fallen for 6 months in a row, mainly led by food prices. I think maybe RBI's own assessment was that this is not going to fall much more, and therefore they have front loaded the rate cuts, and indirectly indicated a pause. So today's number should not be a big market mover, even if it comes slightly below 3%, and will be forward looking as to how the monsoon proceeds. So rupee, again, lackluster trading yesterday, about 15 to 18% range. But what is significant is that we are once again hearing consistent buying from PSU banks. Some people even saying that it's RBI which is which has started to accumulate dollars. And it's very clear, because yesterday market was on the selling side, but it was getting halted well above 85.40. And I think until we get better news or further news on the Gulf side, we are not going to see bigger move in the USD INR. Supplies have been limited, and on the buying side, it is strong. So, if anything, I think that a possibility of break towards 85-80 is more probable. But market tentatively nervously waits for what happens on the Gulf region. Definitely. Thank you.
Thank you, Jake. And just quickly summarizing, after the CPI print, the softer CPI print, yields in the US had come off. This is after some time where yields were going higher, but after the CPI print, along with the geopolitical flare up due to which created a safe haven demand, there was some buying in bonds causing the yields to come down. And where the US-China deal, we got some more details after the US markets opened. Somewhere the deal involved removing the barriers for rare earths and some barriers from the tech side. So that was, as JK mentioned very nicely, that it was quite an uninspiring deal because that's also reflected in the Chinese yuan, which is trading at 7.18 with no reaction over there. Domestically, India needs to watch out for the rising oil prices. Oil prices have risen by about 5% in the last two sessions. And the data to look out for today would be the India's inflation, somewhere around 3% or even a below 3% print is possible. When it comes to USD INR, it remains quite range bound with some support from the central bank seen for the dollar on the downside. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.